Hi guys, I welcome you in this wonderful video. So today I want to share with you something very interesting, and I believe that it's gonna help you. It's gonna improve your price action. So here we are. If you can look at this chart, we have two interesting levels that I want to point out, and then we're gonna take it from there. So we have that resistance level all the way up there. Let me make it a little bit visible. So we have that resistance all the way up there, and then we have this beautiful support all the way here. Let me just put it there, no problem. So the interesting thing about these two levels is that they determine the decision that a trader will make. Because a trader will begin to look at this move. You can see that the market was going down initially, and then it started behaving in this way. So one can say this means that the sellers, they are getting weaker. Why? Because looking at the lows, you can see that they failed to give us lower lows. And looking at that corrective wave, which is very huge, if we can look at this trend, now we can see that it's been a trend that has been flowing very smoothly in the favor of the sellers. But then now looking at this behavior, seeing these lows on the same level, not receiving a low that is lower than that previous one, it means that the sellers are strong. That's how a trader is gonna look at this market. So then the decision that is gonna start making, he's gonna be confused whether he should continue to sell or whether he should be making buying decisions all the way on the support. And in most of the cases, the buying decisions will be the conclusions that he make. Why? Because it is a very clear and a very beautiful support. So a trader will believe that this will be a market that will start to behave like a range. So he will assume that the market is going to start to behave like a range like that, and then he will begin to trade this range which doesn't exist yet. So what should you do as a trader? So firstly, before you can conclude if the sellers are still stronger or weaker, or if the buyers are stronger or weaker, you have to make sure that you don't get fooled by the current time frame that you are looking at the price at. And you should make sure that you confirm with all the time frame that you use as a trader. If you are using 3 time frames, make sure that you firstly confirm with your highest time frame before you make a decision. That's why I always encourage traders that make sure that your analysis starts at the highest time frame, because if it starts at the highest time frame, you won't be making decisions that will later confuse you. So what am I talking about? Let us just pop the daily time frame here and see what I'm talking about. So here we are. Look at how the daily time frame looks like. So if you look at the market in this perspective, you know that it's very hard for you to make buying decision. If I can clear everything, you can see that it's a little bit hard for you to make buying decisions. Why? Because if you can see here on the daily, the flow is still in favor of the sellers. If you can clearly draw your trend line going all the way down on the upper side, you can see clearly that the market is still flowing the same way in favor of the sellers, and there isn't any sign yet to prove that, okay, now the sellers, they are getting weaker. So what then does this small corrective mean? This small corrective, in this case, it is still part of the impulsive. Why? Because it didn't get out of the way. What am I talking about? So I want to make an example. So what makes a corrective wave compared to an impulsive is the fact that that corrective wave breaks the flow of the impulsive. So let me make an example so that you'll understand this clearly. We can see here we have this impulsive, it is flowing, and the way it is flowing, it is made up of smaller waves inside. You can see a wave going down, a wave going up, a wave going down, a wave going up. So why then do we as traders choose to treat this as a corrective, not these waves which are very small here? It is because these smaller waves, they are still part of the impulsive. They didn't break the flow of the impulsive. Same thing applies here. This wave is still part of this impulsive in this case. Why? Because it hasn't yet broken the flow. Why am I saying it haven't broken the flow? Because one can say here was the flow, and then this wave diverged and went all the way up. The reason it is because we can't treat this as an individual impulsive wave, because it is not compared to this one in terms of size. So we can conclude that, okay, this was an impulsive all of a sudden. It is not that case, more especially because there were no signs here in this move which shows us that the sellers are getting weaker. The market was still flowing the same way. We can see the impulsive is still big and the corrective, they're still at the same size. So looking at that size and looking at that size, so it's hard for us to conclude that this was an impulsive and then this was a corrective. So when you make conclusions in these cases, it is very, very important to reference the previous waves and see their sizes, see how the market was flowing, and then make conclusions relevant to the previous flow of the structure. Now, I hope that is making sense. So before you make conclusions that the market is behaving in this particular way or that you have to buy or sell, make sure that you reference your main or your higher time frame. In that way, you won't go wrong. Then when you do your analysis, you know that you do your analysis starting from the top and going all the way down. So when you come back here on the 4-hour, you will know that you are still looking at this market in the eye of a seller. Although it might be a bit late for you to enter here, but you are not likely to make a buying decision. Why? Because your analysis is primarily based on a higher time frame. I hope this is making sense. I'm just gonna leave it here, guys. So thank you for watching.